Okay. Good evening, everyone. Thanks you for dialing in for tonight's IPO webinar. Here we have Cheeding Holdings Berhad will be listed on ACE Market on 7th of October. Cheeding Holdings Berhad are principally involved in the provision of infrastructure, utilities engineering solution, where main activity involve the EPCC and maintenance of overhead infrastructure for utilities. The company is also involved in the EPCC of underground infrastructure for utilities and substation engineering services. Later on, Cheeding management team will discuss it in detail. Here, we grand honor to have here the company executive director, Miss Ng. Hi, Miss Ng. Hi. And our COO, Mr. Ng. Hi, Mr. Ng.
Hi.
Hi. And our CFO, Mr. Yap. Hi, Mr. Yap.
Hi.
Hi. Okay. All right. Let's review the corporate video before run through the presentation. Thanks.
Across Malaysia's skyline, every line that hums with energy tells a story of connection. For over 17 years, Cheeding Holdings Bhd has engineered those connections, designing, building, and maintaining the critical backbone of our nation's power. From the heart of Kuala Lumpur, Cheeding powers Malaysia's future, engineering, procuring, and maintaining infrastructure that keeps the lights on. Our roots with Tenaga National stretch back 2 decades, and the track record speaks for itself, with nearly tenfold revenue growth in just 2 years, backed by strong financials and a robust order book. We're well positioned for sustained growth and reliable project delivery. That expertise is fueling remarkable growth, earned through safe delivery, on time and within budget. Backed by a strong team, more than 200 technical and support staff, we're not just contractors, we're long-term partners to utility and infrastructure clients, and we're ready for our next phase of growth. To sharpen our delivery and scale our infrastructure services, we're building an in-house design team, enabling us to offer faster, smarter turnkey solutions across transmission, underground, and substation works. We're growing responsibly, prioritizing safety, ethics, and sustainability in every job we do. With Malaysia's renewable energy roadmap accelerating grid demand, we see major opportunities to scale up and support the nation's energy transition. Cheeding is ready for the next voltage step. Join us as we connect communities, industries, and tomorrow's clean energy. We're not just building lines, we're building possibilities. Empowering infrastructure, energizing the future.
All right, thanks for the corporate video. Without further ado, we'll start the presentation. Over to you, Mr. Ng.
Hi, good morning, everyone. So my name is Ng Nam Shin. I'm the CEO of Cheeding Holding, and today there's Mr. Yap Hong Yin, our CFO. So both of us will be presenting our corporate presentation. So we'll start with the first on the our corporate offering summary. So the issuer for this IPO is Cheeding Holdings Bhd. The offering will be in the ACE market Bursa securities. The promoters are collectively Mr. Ng Ken Chai and Ms. Ng Chai Sha. Mr. Ng Ken Chai is our managing director, and Ms. Ng Chai Sha is our executive director. We have a portion that is offered for sale by the offerer, Mr. Ng Ken Chai and Madam Tam So Hui. Our IPO listing is Sharia compliant, and we have a dividend policy of at least 25% of consolidated PAT attributable to owners of the company of each financial year. Our sector is in the construction sectors. Our IPO price, indicative IPO price is at 36 cents. Our PE evaluation is at 10.9 times based on the audited reports for FYE 2025. Our enlarged share capital is at 797 millions. Indicative market capitalization at 287 millions. Public shareholding spread is 25.63%. Our principal advisor is TA Security. So if you look at the table on the right on the offering size and structure, the public issue of 143 millions new shares representing 17.93 of the enlarged share capitals. Then we have also the offer for sale of 65 million shares of the existing shares representing 8.15% of the enlarged share capital. Okay, moving on. So for the IPO proceeds, we will be utilizing it in five areas. First, 31.4% of the proceeds will be used for performance bonds for future projects. These performance bonds are in the form of bank guarantee to our clients, and then there is a 47.8% on working capital. So this allocation is for material purchase and subcontractor fee, as well as other operating and administration fees. Then we have 6.2% for capital expenditure to purchase machineries, i.e. cranes and excavators. Next, we have 4.5% for repayment of bank borrowing. And lastly, 10.1% is the estimated listing expenses. Next, so as for our Cheeding Holdings shareholding structure post-listing, so under Cheeding, there will be two wholly owned subsidiary, which is Pembina Bukit Cheeding Sdn Berhad and BC Services. Okay, moving on. Onto the company overview. So, Cheeding Holding, the group is incorporated in September 2024, but our subsidiary company, Pembina Bukit Cheeding Sdn Berhad, the company that provides utility engineering solution focusing on EPCC and maintenance of overhead infrastructures for utilities and EPCC of underground infrastructure for utilities, as well as substation engineering services. So we have more than 18 years of experience in these sectors, and our place of activities is in Peninsula Malaysia. So our company history is back. History dates back in December 1983, where we were under a company called Score Points, and then we adopted the name Pembina Bukit Cheeding Sdn Berhad in October 1986. So the group began in subcontracting works for overhead line for utilities works in 2007, and that's where we start to gain our experience and obtaining our relevant license to tender with TMB, and 2007 to 2009, where 2009 we officially got our first contract in the EPCC for overhead line underground infrastructure for utilities as main contractors. Okay, moving on. So our business segments are in three segments, which is what you can see on the right. First is on the EPCC and maintenance of overhead line infrastructure for utilities. Second is on substation engineering services. And the third is on EPCC of underground infrastructure for utilities. Okay, moving on. As for our key senior management, there are 5 members. First, we have Mr. Ng Kian Chai, our Managing Director. He has more than 40 years of experience in construction-related work. So his role is to lead the group's strategy, drive business growth, and manage key customer relationship. So he also played a role in expanding the groups into civil and utility engineering sector. Next, we have Ms. Ng Chai Sha, our Executive Director. She has more than 18 years of experience in the industry. So her role is to oversee human resources, administration, and managing the group's asset while supporting the Managing Director in executing business decision. Next, there's me, Ng Lam Shin. I'm the CEO of the company. I have over 7 years of experience in the industry. So my role is to oversee utilities, engineering services, including resource planning, site operation, and environmental safety and health matters. So next, we have Mr. Ng Lam Tiong, our project director. So he has more than 20 years of experience in the industry. So his role is to oversee tender submissions, project design, budgeting, and costing. He also leads the engineering department and legal contracts and project risk management department. Lastly, there's Yap Hong Yin, our CFO. He has 12 years of experience. He has more than 12 years of experience in accounting and finance. So his role is to oversee the financial and risk management, including reporting, taxation, and internal control. Next. For our business model, we are in the provision of utility engineering solutions where we have more than 18 years of experience in this industry since 2007. So our business segments are divided into three, which is first on the EPCC and maintenance of overhead line infrastructure, where we take the role as main contractors for EPCC of overhead line and subcontractor for maintenance of overhead line. Next is the EPCC of underground infrastructure, where we take the role as the main contractors. And lastly, substation engineering services, where we take the role as main contractors. Next, as for our revenue contribution in the FYE 2425, um, most of our revenue contributed is from the overhead line segments, followed by the underground, and lastly, substation engineering. And also, more than 90% of our group's revenue were derived from contracts secured from TMB from 2000 FYE 2023 to FYE 2025. So our principal marketplace is in Peninsula Malaysia. Okay, these are the history of our business. So the company was incorporated in 1983 and adopted the name Pembina Bukit Cheeding Berhad in 1986. So in 1986, Mr. Ng Kian Chai was appointed as the director of the company and transformed the company to focus on civil engineering works and subcontracting works for construction projects. Then moving to 2007, that's where we started to venture into subcontracting works for overhead line. And in 2007 to 2009, that's where we begin to gain our experience in the uh, overhead line projects and underground projects. And then in 2009, we participated in the EPCC projects for underground utility infrastructure and overhead line, and we succeed to obtain these projects as main contractor. So 2009 is when we started as a main contractor for TMB. And then moving on to 2014, our project director, Mr. Ang Lam Tiong, he has acquired DC Services in Berhad to undertake the supply of electrical and civil engineering related services on design works for our group's project. And moving to 2022, we participated in projects involving substation engineering works, where we undertook three of such projects from 2022 to 2025. So basically, these substation engineering works is actually a ad hoc of the EPCC for overhead line or underground project that we have taken, and these are a portion of it coming from. It's not a direct taking a substation engineering tender. Okay, and then in 2024, we have incorporated Cheeding Holdings Bhd to embark for listing. And lastly, in 2025, we obtained the approval from Bursa Securities to undertake the listing. Okay, so these are the track record of our project that was taken by our company from 2009 to 2025. But these are just the contract, the highest value contract for each year from 2009 to 2025. So with this, a point to highlight is the 2018, the Pahang 2 project, 65.98 millions, which is a full EPCC for overhead line, where it's the highest contract value that was taken by our company. Okay. So I will further elaborate on each of the business segments. So the first one is the EPCC and maintenance of overhead line infrastructure for utilities. So if you look at the picture on the right, which is the lattice pylon and monopole pylon towers, generally these are the structure used in electricity power transmission and distribution to transmit electricity energy across long distance. So what we does is we procure, supply, deliver, install, construct, testing, and commissioning, as well as we do inspections, repair, and maintenance work for overhead line infrastructure for utility. So a little more brief on these segments. So basically, during the whole process of the projects, the surveying and the design works are done by our appointed third-party consultants. And then once the design and surveys are completed, the construction starts where soil investigation will begin, the construction of the foundations, the erection of the towers, and the stringing of the conductors from this pylon tower to the next pylon towers. This all will be done in-house. So from the soil investigation till the stringing of the conductors all done in-house. And then when it comes to commissioning, commissioning part, we will appoint a third-party electrical certified electrician to undergo the testing for the commissioning. And then the final commissioning will be done by our client side. Okay, moving on. So the next one is on the EPCC of underground infrastructure. So basically, these are the infrastructure that will be installed beneath the ground. So if you can see the picture on the right, so these are some of the example of photos that was taken in our site, one of our project in Kulim. So for underground infrastructure, there are generally two methods of installation of the of the cables. So we have the open trench method, which is what you can see on the right on the pictures. So the open trench method is generally done in house. So uh, the laying of the open trench of the for the laying of the pipe is done in house. The laying of the pipes and the uh, laying of the cables in the pipe also done in house. So there's another method for installation of underground infrastructures, which is what we call the horizontal directional drilling methods. So these are methods where we do not need to actually open up a trench. So there will be a machine that will tunnel down beneath and across to where we want to. So for these methods, as of now, we are currently required the assistance from subcontractors, where we appoint third-party contractors to actually do the HDD portion, as because our current project on hand actually does not require a HDD team. So, but in the near future, if let's say there are projects that are in needs of this HDD and in the usage is high, then we will actually set up a HDD team for it. So for these business activities, what we do is planning, procurement, construction, and commissioning of underground infrastructure for utilities. Okay. Moving on is on substation engineering services. So this segment is not an EPCC for substation. Rather than it's actually what we do is modification, upgrading, and replacements of any primary equipments or secondary equipments in a existing substation, or expanding the primary bay of a existing substation. So if you can see the picture on the right, the top right, so these are example of a project that we done in Johor, where the equipments on the front, that's what we did is we only just did a replacement. The old equipment does not carry the capacity needed for the new line. So what we did is we just replaced with a new equipment that has higher capacity. So from the foundations, from dismantling of the equipment to erecting, constructing a new foundation, erecting the structures, and installing the primary as well as stringing the conductors above. They are all done in house. Okay, so other than that, we do have other than replacement, we actually do construct. But if you can see the diagram on the bottom right, so this is an example of a what we call a temporary transition yard. So a transition yard is what is located in front of a PMU where you can see there are many equipment, but this was just a temporary solution from our client side to do a bypass where the source coming from the main grid can be lowered down via overhead line, landing to this temporary bay, and then connects to underground cable and connects to the client's substation. So this is a temporary measure done introduced by TMB so that their back end clients are able to have their electricity in a faster manner. Okay, moving on. So on the ongoing project as of 15 August 2025, which is the LPD, we have the TAPA project, 36.18 million contract values, completion at 92.19%. So for this project, it's a full EPCC of overhead line projects. The project has already completed and commissioned. It's just that there are small portions where is to be done after the commissioning. However, due to design restriction, the remaining works are still under negotiation with TMB lah. So we are targeting to complete the remaining works in the end of 2025. Okay. Next, we have the Air Tower project, which is a full EPCC for overhead line as well. Contract value at 61 millions, and then the completion is at 82.95% as of LPD. This project is actually coming to an end. We are targeting to complete the works by October or end of October or early November, which is expected completion dates or earlier. Next, we have the Kampong Gajah project, which is a 100% overhead line project. Contract value at 55.5 million, completion at 39.15%. So for these projects, we are actually we are expecting this project to complete in ahead of time as well, since the contractual completion date is in August 2026. But as of the progress now, we're expecting this project to complete ahead of time. Next, we have the Cyberjaya project, where it involves three of the segments: overhead line, underground, and substation. So this project is actually related to a data center in Cyberjaya. The contract value is 30.98 millions. The completion now is at 4.09%, as this project is still under the prelim stage. And then we have the Bedong project, 100% overhead line projects, contracts at 32.7 millions, completion at 2.27%. This is also still at preliminary stage on the design stage. So a note on this project is actually it's a pilot project for us and our client, where this project is actually reconductoring the existing line as what we call that. We are using the same existing structure. It's just that we are changing the conductors on the structure. So meaning to say that the existing capacity of the existing line maybe is not sufficient for TMB already. So what they do is they tender out this project is that we replace the existing conductors with the new conductors. So this new conductor is not yet being used in Malaysia. So this will be a pilot project lah. So we foresee that if this project is completed in the near future, there will be more projects coming out where the use of these new conductors lah. Okay, next is the Iskandar Putri project, where it involves all three segments. Contract value at 25.42 millions. The completion is at 5.84%. So this project is similar to the Cyberjaya project, where it involves a data center in Iskandar Putri. Next is the Gurun East project, where it's 100% overhead line. The contract value is 54.82 millions. The completion at 0.69%. So this project is a 500 kV project. we have we have 500 kV licensing. It's just that this is the first 500 kV project that was awarded to our company lah. So this is our first 500 kV projects. And then there is also Sedana, which is a 100% underground project. Contract value is 14.12 million. The project is just in the prelim stage as well. So for this project, it's actually related to a data center in Sedana, Johor. So basically, this project is what we do is um, our client has appointed another party to do the laying of the pipes via open trench method or HDD. So what we do is we supply the cables and we do the installation of the cables. Okay, moving on. Uh, onto order books. So as of 15th August 2025, our order book now is at 202.67 million, where we are expected to realize the total amount in FYE 2026, 2027, and 2028. At 2026, FYE 2026 expected to realize 123.73 million, FYE 2027 at 71.84 million, FYE 2028.7.1 million. So these are what we estimated based on the projects that already secured and the contract durations. However, to this, we are still actively bidding for new tender. So this order book will vary over time. Okay, moving on to our major customer and supplier. So you can see that from FYE 2022, 2023, 2024, 2025, our revenue are basically generated from TMB, where 2023 to 2025, more than 90% is from TMB. Whereas other than TMB, we do sometimes takes in a private project, for instance, where we take the role as a subcontractor for for maintenance work for overhead line. So, for example, Jaya Bina Aspirasi is one of our client where they they did participate in the maintenance work for overhead line, and then they would uh, send out invitation for us to be their subcontractor, where we what we did is we supply them with labels to do the maintenance work. Okay. Next, we have the KT Lee Realty Development Sanya Berhad. So they are like a developer in, if I'm not mistaken, is in Negeri Sembilan. So what they did is they have a plot of land where there is a overhead line, transmission line came across their land where they wanted to develop. So what they did is they appointed us to do the relocation work of the existing pylon tower so that they can develop the plot of land that they have. Okay, so for major suppliers, we have Rojas Ilko Industry. So he's a supplier of the pylon tower for overhead lines. And then we have Ribe. They are supplier for fittings, which is part of a component used in overhead line. And then we have Sediver, the supplier of insulator, where it's also a component to use in overhead line. Next, we have Leader Cable and Tenaga Cable Industry, where they are supplier of cables, which is used in both overhead line and underground cables. And then we have Ocon Pro Engineering Services, where we do a certain works in the substation engineering services, which is what we call secondary works to Ocon Pro Engineering, as this work is not related to what we do, is more to the system protection and the telecommunication from one PMU to another. So usually we will just total sub that small portion to Ocon Pro Engineering. Okay, as for our investment highlights, so our upcoming business strategy and future plans. First, we intend to secure more utilities engineering service projects. So by leveraging on our current capabilities to expand our revenue stream by securing more underground substation engineering services project. So as our company do have participate in all three segments, but most of the time we are more focused on the overhead line segments. But then once the proceeds come in and we are more financially strong and capable, so we will actually expand our revenue stream in underground sectors and the substation engineering sectors. Okay, so other than this core business, we also in the future we do also intend to expand our offering in the EPCC for substation. So EPCC for substation it's different from what we had, which is the substation engineering services. EPCC for substation is basically building a new substation. So the contract size will be bigger and more complex compared to a substation engineering services. Okay, next, we also intend to set up a design department to capture growth opportunity. So, being said that when we do tendering with TMB, at times that tenders are actually open and close in a short period of time. Maybe there's like sometimes they are 2 weeks, sometimes they are 1 month. So the intention of set up this design department is to actually to control the design process and offer a more comprehensive solution to our customer. With this, we are able to actually control our margin in a better way as the design is controlled by us. As of now, the design is controlled by our third party consultants. So we are able to comment, but sometimes there are limitations and understandings to the comments. So having our own in-house design team will actually helps the process. Okay, next is to intend to strengthen our internal capabilities to position us more favorably in securing new projects. So in order to progressively secure projects from our customer, we will continue to demonstrating our project track records, financial strengths, availability of our technical personnel and machinery. Just a bit info, we have more than 220 technical personnel, as well as we have multiple machineries we're able to assist the workers on site. So with that, we will intend to leverage on our track record as well as our license and certificate to undertake larger scale projects in the future. Okay. So the our power infrastructure utility industry outlooks. So I think the key point to here is that the growth drivers. We have long-term economic growth, growing data centers infrastructure in Malaysia, population growth and urbanization, the foreign investment and domestic investment growth, the government initiative to strengthen power infrastructure in Malaysia. So we can see that the capex for the power infrastructure utility market in Malaysia rose from 5.7 billion in 2016 to 14.2 billion in 2024 at a compound growth rate of 12.1%. In 2023, TMB incurred a capex of 10.3 billion, and in 2024, 11.2 billion. So in the June 2025, our Prime Minister did announce that TMB will commit 43 billion to upgrade the national grid infrastructure to prepare for the ASEAN grid development. So with all these commitments and capex, we actually foresee that in the upcoming few years there will be a lot and bigger projects to actually support this growth. So we are at the positive outlook for our company due to the rising demands for electricity. Okay, moving on to the financial highlights. For this portion, I will pass it to Hong Yun, our CFO, to further explain.
Okay. Good evening, everyone. I'm Hong Yun, CFO of Cheeding Holdings Bhd. So I will continue with the presentation of financial highlight of our group. All these figures is as of the 31st financial year ended 31st March 2025. So our revenue recorded at 117.68 million, profit after tax of 26.35 million, and our total asset recorded at 94.07 million. net asset or total equity of 50.37 million, current ratio of 1.79 times, and a very good gearing ratio of 0.06 times. While for the trade receivable turnover period, 12 days, and trade payables turnover period of 22 days. Next. Next will be our group revenue as of 31st March. So you can see from the chart that our revenue is at the upward trend from FYE 2022 to FYE 2025. We recorded 9.48 million in FYE 2022, increased to 36.95 million in FYE 2023, and subsequently increased to 88.16 million in FYE 2024, and lastly increased to 117.68 million in FYE 2025. And as explained by Shane just now, our revenue deriving from four segments: EPCC of overhead, EPCC of underground, maintenance of overhead, and as well as substation engineering service. So from chart, you can see that the highest contribution of the business segment is deriving from EPCC of overhead, ranging from 67.88% in FYE 2022 and range up to 99.48% in FYE 2024. Next slide. We will further analyze by segments and over the years. So under the EPCC of overhead, we recorded 6.4 million in FYE 2022, increased to 32.7 million in FYE 2023, and subsequently increased to 87.7 million in FYE 2024, and slightly decreased to 81.1 million in FYE 2025. While for the maintenance of overhead segments, we recorded 3 million in FYE 2022, 3.4 million in FYE 2023, 354K in FYE 2024, and lastly 1.9 million in FYE 2025. For the substation engineering services, we did not record any revenue in FYE 2022, 810K in FYE 2023, 103K in FYE 2024, and lastly 7.9 million in FYE 2025. You can see the spike increase in FYE 2025 for substation engineering services segments, and as well as the EPCC of underground, which recorded at 26.6 million in FYE 2025, is mainly due to the cooling project that commenced in FYE 2025 and completed in the same years. Under this particular cooling project, there are three segments under this project, which is overhead, underground, and maintenance, where the highest contribution is deriving from the underground project. Yeah. And next will be our gross profit. You can see that also is at the upward trend. We recorded 4.8 million in FYE 2022 and increased to 17.9 million in FYE 2023, and subsequently increased to 39.2 million in FYE 2024, and lastly increased to 45 million in FYE 2025. Well, for the GP margin, we recorded 51.12% in FYE 2022, decreased to 48.45% in FYE 2023. The decrease of GP margin in FYE 2023 is mainly due to there is a VO that we received for one of the particular project in FYE 2022, where we able to leverage our existing labor to carry out the scope of work of the VO. In other words, we able to cost saving that lead the higher GP margin in FYE 2022. And the GP margin has further slightly decreased to 44.49%, and lastly to 38.3%. The decrease of GP margin is mainly due to the cooling project that mentioned just now. Just give you all some context. For those project with three combination, where the highest contribution from the is deriving for underground, for this project normally carry relatively lower margin as compared to the overhead margin. So this is the reason why the GP margin decreased from FYE 2023 to FYE 2025. And next will be the profit before tax. We recorded loss before tax of 223K in FYE 2022, increased to 11.2 million in FYE 2023, and subsequently increased to 27.4 million in FYE 224, and lastly, it increased to 34.9 million in FYE 225. While for the PAT margin, we recorded loss after tax of 276K in FYE 222, increased to 8.2 million in FYE 223, and subsequently increased to 20.4 million in FYE 224, and lastly increased to 26.3 million in FYE 2025. The loss before tax and also the loss after tax in FYE 2022 is mainly due to for that particular time is MCO time. We just carry out all tools work that carry forward from the previous financial year. That's the loss before tax and loss after tax. And while for the PAT margin wise, we recorded 22 to 23% between FYE 223 to FYE 225. Okay, moving on. So here are some of the key takeaways. We have more than 18 years of experience in this industry, and we also have a very stable revenue secured through TMP projects, where accounting for over 90% annually. Also, we did have a very good leadership, and also we have a very strong team of over 220 technical and support staff, and we have a very solid finance as of 31st March 2025, PAT of 26 million, strong liquidity of 1.79 times of current ratio, a very good low gearing of 0.06 times, robust pipeline of 202 million of order book, and we have a very clear strategic growth engine where we intend to build in-house design, expanding underground and substation projects, and also targeting bigger and complex contracts in the future. Also, from the industry-wise, there is a rising demand in the power infrastructure, increase of capex over the years, and lastly, we have a very attractive IPO, where PE ratio of 10.9 times, and this is a Sharia compliant security, and we intend to declare at least of 25% of our PAT as dividend yearly. Yep, I think that's marked the end of our presentation.
Okay, thank you. Thank you, Mr. Yap. Thank you, Mr. Ng, just now for the presentation. Okay. Are you guys ready for the Q&A section?
Yeah.
All right. Okay. For the first question asking about data center, how many data center project are you currently undertaking, and are the margin on this project is higher compared to other segments?
Okay. So as of now, we have 3 projects that's related to data center. One is in Cyberjaya and 2 is in Johor. So in terms of the margin wise, because the Cyberjaya and Iskandar Putri, it's a combination segment project. So the margin would be lower because the portion for the underground is bigger compared to overhead line. But if you are comparing like generally overhead line and a underground projects, overhead lines would carry a higher margin.
Okay. Okay, they're asking about the SST 8%. Is the implementation of the SST 8% impact your business, and are you eligible for any exemption?
I would to say that the financial impact for the SST is minimum. We can see this at 2 sides, the billing to our customer and also the billing from supplier. So for the billing for the customer, for all the billing for those contract that we secure after the effective date, we did include in the tender. I mean, we will need to charge the SST to the client to transfer the tax to the client. And while for those contract that ended before the effective date, we did have a 1 year exemptions for the non-renewable contract period. So, and while from the supplier side, I can say that most of our supplier either is they already charge us the SST before the effective date, which is 1st July 2025. For now, it's just it's no impact, and some of them is exempted from the SST as well. Yeah.
Okay. Okay, the next question is, okay, how do you differentiate yourself cheating from competitor in the EPCC and overhead industry market?
Okay, so I think is one I can think of is a few points. First is on the works carried out by project basis. So um, basically, you can say that about 90% of the work is all done in-house, except for like what I mentioned earlier, the survey part, the design, and the HDD for the underground. Those are done by subcontractors lah. So having our own in-house team, we are actually able to have a better control, a better time control management, and then we are able to utilize our resources planning and all more effectively lah. Okay, the second one is I can say that is our low gearing ratio. So you can see that when we compare to some of our peers, we have a better margin. Is that we have a low borrowing. So meaning to say that we pay less interest to banks, basically for bank borrowing, and then also like the previous point where everything done in house, so we don't have to cut our profit margins to pay for subcontractors. And then the last one is I'll say is the experience from our managing directors, project directors, our key senior management basically. They are all experienced in this industry for many years already.
Okay, quite clear. And another question is coming up, like, how do you compare with other construction and infrastructure player in Malaysia?
So with this, I think other players lah. So for the overhead line segments, it's a rather niche market. So we often see that there might be 4 to 5 competitors during the tendering for overhead lines. So that portion is a niche market. That's why we foresee that the margin there is better. But compared to underground, where it required less skilled labors. What I say skilled labor is that for overhead line, our workers need to climb up those tall towers, working at height. But for underground, basically what you're working at is maybe at a depth, a more shallow depth, 1 meter to 2 meter to 3 meters. So it's less. It wouldn't say be a lower risk, but it's more controlling jobs lah, where you are able to actually monitor and observe everything on ground level, whereas for overhead line is harder lah. Yep. So underground portions and the substation engineering portions, they are more competitors compared to overhead line.
Mm. Okay. Could you share your current tender book with a break even by project or segment?
Okay, so as of now, we did not disclose our tender book due to like PNC's reasonings. But then what I can say is that our tender books are very healthy. We are still actively tendering for projects. And then if you were to say the segments, it's more to 50-50 lah, where 50% overhead line. I mean, in terms of the contract values, the underground segments will be bigger. So maybe it's a 60-40 lah. 60 on the underground and 40 on the overhead line.
Okay. Okay, they're asking about the Chinese company. How do you view the enter of the Chinese company into this market? Do you see is this a competitive risk for you?
Okay, so with this, TMB actually protects the local market. So in a way that these tenders that are open out, the company that are able to participate, they have to be from a local company lah. So if for a China company to enter, they need to JV with a local company only able to tender lah. So there are certain restrictions to it lah.
Okay, also quite good, protect our local company. Alright. Okay, just now you also mentioned TMB as your client is more than 90%, right? Given that TMB account more than 90% of the clientele, how do you ensure that TMB continue to like give you more project other than your competitor?
Okay, so with this, right, there's no guarantee that you tender with TMB, they will give you the job. So the tender are all open tenders. So what I can say is that we have good track records, competitive pricings, good financial positioning. So it's actually in terms of TMB, I presume that in terms of financial, they also have to study whether are the tenderer able to complete the job or not.
Okay, just now you also mentioned you don't have your own HDD machine, and would you like to invest in future to capture the underground utility project?
Uh, Yes, so it's part of the planning as well because as of now, the costing for a HDD machine is not very significant, where it takes a lot of money. But it's just that what the project on hand that we have now does not require the use of HDD lah. But in our active tendering pipelines, we do encounter certain project that require HDD machines. So if let's say we were awarded with a project, we will intend to actually set up a team for it lah.
Okay, around how much for one HDD machine?
It range. So I mean, it can be like probably 200,000, yeah, up to maybe 5, 6, 700,000. It depends lah because the machine itself, and then it comes with what sort of accessories you are looking for lah.
Okay, thank you. All right. Okay, they are asking about, could you explain why EPCC revenue from overhead works was lower in 2022, but rose sharply in 2023? Is that driven by specific large-scale project? And then is the growth sustainable?
Can you repeat the question again?
Okay, this is a question asking the revenue from the overhead works was lower in 2022, but suddenly increased in 2023. Is there any any growth driven by that?
Okay, so I think the answer to it is that back in 2022, that's the MCO period. So there wasn't any new contracts coming out with TMB. So what we did is we only continued the project that we has been awarded to us prior to the MCO lah. So back to when everything is starting to open up, TMB has a lot of backlogs on contracts. So that is where you can see there will be there were in that period of time there were many projects that was tendered out lah. So that's why there's the spike in it lah. And we managed to secure a few of the tender. Yep.
Okay. The next question also asking quite similar. They're asking for substation revenue is zero in 2022 and surgeon in 2023 before drop in 2024.
Okay, so for this, right, it's because the substation engineering segment is actually ad hoc from the EPCC side. So not all of the EPCC project has this segment. So that's why there is always a up and down for it lah. So if you can see like in FYE 2022, in that period of time, there wasn't new projects and the on the hand projects are mainly overhead lines project. So there wasn't any contribution in the substation engineering services. Then in FYE 2023, I believe the increase was because of the quantum project, where that project is a EPCC for overhead line, but it ad hoc a portion of it for substation engineering. And then viables for 2024 and 2025 lah, where 2025 has a huge spike is because of a project in Kulim, Kedah, where it involved all three segments, and then the majority of these segments is coming from uh, the underground, followed by overhead line only till the substation.
Okay, thank you. Quite clear. All right. Okay. Could you provide a breakdown of margin by business segment?
I would to say that for underground project, normally the margin will be ranging from 30 to 40% for the EPCC of underground, and while for the EPCC of overhead, it will be ranging from 40 to 50%. If let's say we did good enough to receive a BO, it may be up to 60%. Yeah.
Okay. Okay, this is asking about your tender process duration. On average, how long does the tender process take before site visit and start the project?
So for this, right, usually like from what we observe, is TMB will float the tender in their portals 1 to 2 weeks prior to the site visits lah. That is on a normal occasion lah. We do encounter sometimes where TMB just float the tender and then 2 days later there are site visits. Those are the what we call urgent projects lah. But most of the time is 1 to 2 weeks float tender, then attend the site visit, and then the closing. It ranges. It depends on what's how urgent is the project lah. There are some project where the you have to close the tender in 1 weeks, whereas there are some where it takes 1 month or a few weeks. Yeah, and then this tender validity upon closing, it's valid for 180 days.
Mm. Okay.
6 months.
6 months. All right. Do you facing any shortage of worker right now?
As of now, we do not have any shortage on workers. Our we are not we are still have additional capacities to take in more projects lah. But in the future, where let's say we reach the capacity, we have our own resources to actually bring in more workers, and then other than that, we are still open for the methods of exploring to subcontractor lah. So for now, we are still not exploring the options. More to everything all done in house, where how we utilize and how we allocate our resources effectively, so that yeah, so far there's no shortage on it lah.
Mm. Okay. Do you plan your business into East Malaysia?
As of now, the company's direction is still within the Peninsula Malaysia, because we foresee that there will be a lot of tender coming out in the next 1 to 2 years. So the options of going there, it's open, but because entering the East Malaysia market, there will be different criteria. I believe the the methods of entering into tender for the East Coast side would be different. The licensings that would be different as well. But we are open to the options. But as of now, the company's direction is stick in Peninsula and tender more jobs here.
Okay, currently focus on Peninsula first.
Yep.
Okay. How do you plan to secure more government compared to private sector project?
Sorry?
How do you plan to secure more government compared to private sector project?
How secure?
Yep.
Okay, so this is just from my experience lah. With government, like how we are dealing with TMB now, the payments are pretty secure. You can see
Trade
uh,
receivable turnover.
our trade receivable average is 12 days. So there's no issues payment from TMB. But whereas if on the private sector, that's why like currently more than 90% of our revenue is coming from TNB, because we believe that TNB would not would be a better paymaster compared to the private sector lah. Because with private sector there are always changes lah, where there might be some of it having cash flow problems as well. So yeah, we that's what we see on the private side lah. But then if let's say there are opportunity where there are good opportunity with a high profit margin projects coming from the private sector, we will consider as well.
Okay. Just now you also mentioned that the trade receivable is 12 days. For those project, could you provide why they so fast you receive for the payment?
Okay, so with this, right, it's because with TMB, our claims are via their e-system already, so everything is digitalized. So as long as we what we call we issue them the PO, and then with our supporting documents are all complete, and then from their side they just have to click of button to accept this claim, and then it will direct to their financial departments, and then the process will be out faster.
Mm, Okay. Also, the following question just now we discussed about the uh like the shortage of the worker, and now currently you have 226 staff. Could you share with us how many engineering and foreign do you have?
Okay, so for of the 220 lah, I'll say that 40% they are the skilled labor, so they are the skilled general labor lah. Okay, so those are the one that does all the climbings and all, and then 60% are foreign workers, like those general workers. Of the 226, I believe the numbers for like locals, I'm not too sure. Maybe it's about 30 to 40. Yeah.
Oh, okay. And could you share how do you maintain this good staff environment?
Mm, I mean, how to maintain? So I think is that we are always on a very strict salary payment time, I say. So we are always like on time for the payment, and then for the salary payment lah, one, and then we do not delay them, and then other than that we are always issuing bonus as well to our staff. And then other than that is the work, it's quite straightforward. You work Monday to Saturday, 6 days, and your working hours is usually the nine to six, for instance, 9 to 6. So you don't have like additional OT and all, because when you're on site, when it's dark after 6 o'clock, it's actually a hazard to work at night. So you don't have like a OT time lah.
Mm, okay, quite good. Even work at night also don't have any efficiency.
I mean, some people do work at night. Yeah.
Yep. I mean on site. Yeah, on site.
Uh,
Okay. Okay, this question asking, why do you allocate almost half of your IPO process to working capital? Is this for funding the specific projects?
okay, so what we can see now, the trend, right, where it involves data centers and all, majority of the scope will be in the underground portion. So the material costing for underground, it's higher compared to overhead line. So we actually need to reserve a certain amount of my cash flow for the material for underground lah.
Mm. Oh. And yep, how do you manage your cost inflation?
Uh, Cost inflation. So with TMB tendering, right? Once you already place your tender price, it's actually locked already. So they would you can't like because of inflation you have a variation order with TMB lah. So with what how are we able to um, prevent the inflation. One is that when we deal with our supplier during the tendering stage, we have a terms and condition with them that what they offer to us, they are able to do a plus minus to a certain percentage lah, so that anything more than that, then they have to bear with it lah.
Mm.
Yeah.
Okay. How do you see yourself, Cheeding Holdings Berhad, in the next 3 to 5 years?
Um, okay, so what I can see, we'll be busy lah, basically. We'll be busy with a lot of projects lah.
Okay, quite good news. That means that got a lot of project in the
Yeah.
upcoming pipelines. Okay. Okay. The next question is, Cheeding Holdings Berhad has experienced growth over the past 4 years, increasing 10 times. Can this growth rate be sustainable, and what challenges do you meet right now? Like, for example, could fluctuation in raw material price have an impact? I think just now you already answered it. Would you like to add more?
Okay, so um, I mean, as a company, we do hope and intend to actually grow the business bigger and bigger. So uh, we foresee that in the future there will be many projects coming in, and then with that many contractors lah, so the demand is high, the supply will be low lah. A trend that we might foresee lah. So the restriction to this is actually is more to the financial side, because when a project is awarded with TNB, you generally need to pay a 5% um, performance bonds, and then every consecutive claims, there will be a 10% retention up to the commissioning, when you receive what we call a takeover certificate, and TMB will give you back a 5%. And then during the defect liability period, they will lock you for the remaining 10%. Generally, is 1 year to 2 years, but most of the time, is after 1 year they will return. So this actually will cause a lock to your cash flows. So we foresee that other competitors will have this same issue as well in the future. So having this listing is actually to strengthen our financial, so that in the near future we do not have these cash flow issues where in construction, if you have cash flow issues, basically your projects will delay.
Mm. Yeah, right, correct. Oh, okay. There's another last question pop up. And what is the tender successful rate from TMB? If TMB got 10 project, would you get 1 to 2 project?
Okay, so I mean, from our past records, it will be about 20 to 25% hit rate. So 10 projects, we are looking at 2 to 3.
Okay, also quite good. Okay, all right. Tonight, I think we answer almost all of the questions. Okay. Before we end, is Mr. Ng and Mr. Yap and Miss Ng, do you have anything like the closing remark for our investor?
Okay, so just a short and sweet one. So our company has just launched our prospectus last Friday. So now we are open for the balloting, and the ballot is to close on the 23rd of September. So if you're interested, you can place your balloting. Yeah.
Okay. Okay. Once again, congrats on upcoming listing on the ACE market on 7th of October. All right.
Thank
Thanks,
you.
Mr. Yap and Mr. Ng and Ms. Ng. Okay. Have a
Thank
nice
you.
day. Thank you.
Thank you.